Hello, and welcome to Price Your Services and Pay Yourself. I want to really thank Bree for including the creative CFO, moi, in her all access pass. You all are in for a treat on pricing your services and paying yourself. I'm so glad that you opted to get this package. I know you've heard from a ton of great speakers. You've got a lot to process. And then we're going to add this on the end so that you can make sure that after you've done all of that hard work, considering what goes into your launch, that now you're able to price your services accordingly and pay yourself a reasonable wage. So thanks, Bree, for having me. I'm super excited about this topic, as you know. Bree knows just how passionate I am about making your business support your life and not the other way around. And I'm also a stickler for doing all of this stuff profitably. There's no reason why you should be doing it otherwise. All right, so let's talk about today's topic, what you're going to take away from it. So you're going to take away the 6 basic components of pricing your offer profitably. We're also going to talk about the importance of paying yourself and the 50-30-20 method for allocating your monthly profit. Then we'll dive into the financial preparation you need to make, better decisions in your business, and get a head start on your taxes. So let's dig into it. All right. But before we go there, let me tell you a little bit about me. Some of you may already know me. We've become friends on Instagram. But for those of you who don't, it's so nice to meet you. But my name is Dondria Owens. I'm a CPA and a CFO for women entrepreneurs. I help them know their numbers, grow their profit so that they can live the life of their dreams. I typically work with coaches, consultants, creatives, just community builders in every sense of the word. Okay, so now that I've introduced myself, let's introduce this topic. Pricing your offer for profit is where we're going to start. So we're going to talk about what you actually need to know to be able to do that. And it has nothing to do with looking under the hood of your colleague's business or your competitor's business. It's okay to have competitors in your market analysis as long as we're not catty, right? Okay, so let's talk about the 6 components that go into pricing your offer. The very first one is delivery. So you want to consider what it costs you to deliver your service to your ideal client. Do you have to hire subcontractors to do part of the work? Are there materials or supplies that you need to purchase? I'm thinking first in mind of a graphic designer who might purchase fonts or a temporary subscription to the website or things like that. Or who might have subcontractors who help with maybe the development side of things. Or for some, they may actually be design assistants or things like that. We also want to consider processing fees. So does it cost you to take a payment, which most of us, it absolutely does. And is there additional software required for you to be able to process payments, and what's the cost of that? So whenever you are pricing your offer off the top, you want to think about those things because those are expenses that you will have to cover every single time you make a sale. The second one is your operating costs. So you want to look at what it costs you in general to operate your business. So those are the things that whether you have a client or not, you're going to have that expense. So you want to think about if you have office space or if you have software subscriptions that you pay for monthly that help you do email or scheduling or your website, things like that. All of those things go into operations. Also, you want to consider if there are any contractors who directly support you in the business. So anything that it costs you to actually run your business are considered your cost of operations, and you want to make sure that those are covered. So you can want to kind of think of those as overhead costs. All right, the third thing that you're looking at is your profit. So when you consider the cost of delivery, which we just talked about, and then also the regular cost of your operations, next I want you to think about, well, how much time in a day do I have available to actually serve clients? And in a period of a month, reasonably, how many clients could I take on, knowing how long it takes me to deliver on my service? So that is going to give you something called time capacity. So no matter what you do, you can't give yourself more time. So you've got a finite amount of time in order to deliver to your clients. And so we want to see what that number is, because that lets us know the maximum revenue at any price point. So whether you charge $200 or $300, we know that the time is static. And what we're going to do is take that profit that we need to make, add back to it any cost of delivery, cost of operations, and that is going to get us to what our revenue needs to be for us to have whatever that profit looks like. Now, I always use as a baseline for online businesses, because I've seen it be consistent in the space. Profit is typically between 30 to 50%, or profit margin is between 30 to 50% in online businesses. Is every business that way? Absolutely not. Service-based businesses are what I'm speaking on. Products-based businesses have a significantly lower margin because they do have to purchase products or supplies and materials in order to produce a product. So think about it along those lines. If you're a service-based business, a consultant style revenue, the way you want to think about that is your profit margin is different than you want to think about it if you are a products-based business. All right. Next, we want to look at actual value. How much value does your potential client place on your service? So what amount of time are they going to save, and how much is that time worth for them? So with ideal clients, you want to think about what that person does. So if the person you serve is a coach, for instance, and you're a virtual assistant, you want to think about how much time you're going to be saving that coach with whatever your offer is. And then from that, you want to look at the cost of her time. So if she had an hour back, how much would she value her hour at? What's her hourly rate? And so thinking along those lines, you can start to communicate your value in a way that actually correlates with what your client charges and how they can see value. So you've got to keep all these numbers in mind. And all of this is in consideration of your offer, because it sets the range for what you can charge. All right. Now, last two are dependent upon the market and less about your unique situation. But you're going to look at what prices exist in the marketplace. So when you're looking around at your competitors or people who are colleagues or do similar things as you, what are they charging for the same thing? And then in the areas where you are different, how are you different? And how are you more transformative than the current market offers out there? That's going to be the best way for you to differentiate yourself and to also be able to charge more for whatever it is that you do. And then the last one is supply and demand. So you remember how we talked about your time capacity when we were talking about your maximum revenue and taking out those expenses and getting back to profit? Well, based on your time capacity and the demand for your services, are you flooded with clients and booking way into the future? If so, it sounds like you have low supply and high demand. And I like this quote, when they go low, we go high. It is from our former First Lady, Michelle Obama. And she did not mean it this way when she said it. But what it typically means is when supply goes low, the price has to go higher, especially if demand is high for it. So I caution business owners from booking too far in advance, because you never know what's going to happen in business. And you want to make sure that you can keep your pricing consistent with the value that you bring and be able to adjust where necessary. So you don't want to tie yourself into long-term contracts that don't allow you a price increase when it's necessary. All right, let's dig into this second topic, which is my absolute favorite, which is paying yourself from profit. I want to tell you how to do it. I know when I first started my wedding invitation business back in the day, I did not pay myself the entire first year. In fact, I invested funds in that business more often than not because I was still working as a full-time CPA. So one of the things that I learned, though, was once I made that first payment to myself, I'll never forget it. It was $100 that I paid myself from a wedding order, and it was the very first time I'd paid myself. I felt so good. I finally felt like I had done something successful in the business and I had created a profit. And so moving forward from that, I made it my goal to always focus on having profit from any wedding order that I took on. And from that sparked changes in my pricing, changes in wholesale orders that I would make, all sorts of things. And that's kind of led me to where I am now, and why I can help you is that I know it's such a different muscle to pay yourself than it is to just make money. And so it's a new muscle. You've got to grow it. We just have to work on it. And I want to show you how to do it without ever going cash poor in your business, because you can't pay yourself all of the profit, but we'll talk about it. All right. So I've got a really simple formula that I use for paying yourself. I use it with all of my clients. We do modify the percentages based on where they are in business, but the basic framework will work for anyone. And there's only one rule to applying it in your business, and that is that your business must be profitable, because you can't pay yourself from a loss. So that's it. Just that you be profitable and that you commit to doing it, and you do it before you pay anyone else. So let's talk about it. So you started your business for freedom. And whether that was you gaining more hours back in your day to do things that you love doing, or being able to pay off student loans, or buy a car, or buy a house, or just have money to travel, you determine that. You're in charge of that. And I want to see you meet that goal. Otherwise, what's the point, right? We could just go back to a 9-to-5. So don't stall yourself out by not paying yourself. Give yourself that cushion, that benefit from having worked and worked well. And I always like to say, work without reward leads to burnout. I mean, I wouldn't go to a 9-to-5 without a paycheck. I just wouldn't do it. So I'm not going to create that in my business either and end up not liking myself as a boss. So I feel like you might feel the same way. So pay yourself a reasonable pay until you can reach your dream salary and quit your day job if that's your goal, or keep your day job and have a side hustle that is more than a side hustle. I love seeing that for all of my women entrepreneurs as well. All right, so let's talk about my method. I created a framework for paying myself way back in the day, and I did it based on a personal finance principle called the 50-30-20 method. And in that method, it kind of breaks down fixed expenses, variable expenses, and savings. And I said, well, what if I made that apply to business, right? It would make a lot of sense, especially because taxes, when you consider state and federal, can often, if you're doing really well in business, be really close to 30%. But even though it's overkill for some, at least it's not undersaved, right? And then 20% savings seemed like a really good cushion at the time. So with that, I was left with the 50% for personal pay. And I said, well, you know what? If I split it 50-50 between me and the business, I feel really good about that. So all of that to say is that this framework came out of all of those thoughts. And I want to teach it to you because my clients have loved it so much. And they've also loved being able to adjust it and be flexible during periods where other things besides paying themselves become a priority. But that first percentage never goes to zero. All right. So the 50-30-20 method means that you will apply against your profit. Remember, because we've got to be profitable, you'll apply the 50% personal pay to your profit and then transfer that to your personal bank account. So no shared bank between the personal and the business. It's got to be a separate account. And you only use your personal account for personal things and vice versa. And then for your tax savings, you're going to do 30% of profit and put it in a tax reserve account. So when estimated taxes become due, you can send them right in and not have to worry about having a huge tax bill at the end of the year. And then you apply 20% to your profit to determine your business savings. And that's first going to go into your emergency fund until you get at least 3 months of expenses on hand. After that, those funds can be considered for investments. If you want to invest in a contractor to help you come in and redo your course, or refine one of your processes, or hire a coach, or dabble in Facebook ads, things like that. You'll have money on hand and you won't have to tap credit to do it. All right. Now, as you're growing this muscle of paying yourself, I want you to adapt this mantra. And it is, I don't work for free ever. I want you to say that in your head. Now, this doesn't mean that you don't ever do like pro bono things, but the core work of what you do, what your clients pay you to do, don't step out of integrity and do that for free. You actually get paid for that. And it's a muscle you're growing, but the more you say this, the more it's going to grow. I know it. I've seen it happen. All right, so let's kind of sum things up on financial preparation and really talk about how to get a solid process in your business and keep your business transactions separate from your personal, pay yourself from profit, and then be able to save for taxes and other investments, because that's really all you need to be fiscally responsible and financially prepared in your business. So you want to know your numbers, and the best way to do that is by using a software like QuickBooks Online or Wave. You want to pay yourself, which I've given you the 50-30-20 method that you can use. That's super simple, foolproof. All you need is profit to be able to apply those percentages to. And then save for your business. So you want to save for those investments and for your emergency fund. And you want to save to be able to make your estimated tax payments when that time comes as well. All right. Now, if you've heard all of this and you're saying to yourself, well, that all sounds great, and I'm sure I could do that on my own, but I kind of don't want to, then the Creative CFO is here to help. You can visit us online at thecreativecfo.com and learn more about our services and how we work with clients. You can also find me on Instagram at thecreativecfo. DM me. Let's chat about what's going on in your business. Or feel free to send an email to hello@thecreativecfo.com. We are open for enrollment. We will be closing it for the year at the end of September. So keep that in mind as you are going about the year. Again, I'm Dondria Owens. I'm so happy that I could be in Breeze All Access Pass, and I hope this has been super helpful for you. Again, let's connect on social at The Creative CFO, and I'll see you over there in the DMs.